Okay, joining me today is Ewan Webster, CEO of Thesis Gold. Thesis Gold there is in the Toodoggone region of northern BC, and they've got smaller 4.5 million ounces of mostly measured and indicated gold in their name. They put out a PEA just a few months ago, and so 2025 is going to be another important year in terms of milestones and catalysts for their company. There's a PFS coming up, but I don't want to step on Ewan's toes too much. I brought him on here for a bit of a grab bag. Just talk about new hires and some financial questions, but we'll start with classic, what is coming, right? 2025, we're coming down the pipe right into it now. Maybe Ewan, do you just want to walk us through what can we look forward to coming out of Thesis Gold this year? And maybe more to the point is, why does it remain a compelling story for investors in terms of catalysts and storylines?
Yeah, thanks, Matt. So far this month, we've announced the initiation of the PFS. That's going to be Ausenco and Mining Plus led. So, two kind of globally recognized groups with a fantastic track record and the ability to take projects through to construction as well. So great to have them on board. And as you said, that it's projected to be complete, probably early Q4 this year. And then following up on that, we announced two new hires, Chief Geologist Evan Orovan, who's a porphyry and epithermal expert. And, it's a very timely addition to the team. He's going to be fantastic at, delineating our targets in both the kind of gold system and the deeper potential for that porphyry as well that we've talked about in the past. And then Kettina Cordero as well, who is not VPIR, and she's had 15, 20 years of experience working at majors and mid-tiers, including Pan American Silver, Alexco, Capstone, most recently at Aris. So real industry vet, comes very highly recommended, and we're very glad to have her join the team as well. And I think it just looking forward in terms of the team, I think what you'll see is that we'll probably continue to build out our team and rely less on consultants going forward. As we transition through the PFS, I think you're going to see us add a VP engineering, probably somebody to help with permitting as well. So exciting time in terms of personnel additions. And then looking forward to the rest of the year, we've got one batch of drill results still to put out. Those are 90% geotechnical holes, but we had some good mineralization, and they should be out shortly. Following that, I think Evan, once he kind of hits the ground running in the next month or so, he's really going to start working up these targets, put together a bit of a plan for what we're aiming to tackle this summer in terms of our drill program, which will predominantly be focused at ranch, looking at, again, new targets, both in the epithermal and porphyry environment. And then we're also going to kick off the EIA this year, so the Environmental Impact Assessment, basically the start of permitting from the project, which is extremely exciting. I think we're a lot more advanced than people recognize, and really getting the permitting underway, getting PFS complete by the latter part of this year will really demonstrate that we're one of the top development assets in South America, basically.
Well, no, excellent. There's a few different kind of launching points from there that I'll try to trace myself back to here. You touched a lot of things I do want to cover. But I think maybe let's kind of get back to first principles, or get back to basics here a bit. I mean, so there will be, you are in this transition and there remains a lot of exploration upside. If you followed along with Thesis or follow along with my conversations with Ewan, that's been, that's a continuing theme about with Thesis Gold, is that they continue to develop. But at the same time, that by no means means that the exploration potential is gone, at ranch in particular. Maybe knowing full well the PFS is coming, we're getting into feasibility studies here, getting pretty serious. But maybe can you just run us through then, what can we expect for a drill campaign? And then maybe my own question would be, is this dedicated to upgrading inferred to try to get it into a resource that can work? Or is this more exploration based or infill, or what's the goal with these meterage as well?
Good question. So, I say, firstly, we are in a very fortunate position where, we've got 4.7 million ounces, 4 million which is measured and indicated. So we've got a good critical mass here. And I'm going to take basically a two-pronged approach to moving company and project forward, where I think we're fortunate that we can keep pushing the project forward as is almost, where we'll work on permanent, we'll work on PFS and keep de-risking it, keep moving it towards that construction decision. But at the same time, we have so much upside remaining, which is kind of unique for these type of deposits once you get at this stage where, we're just shy of 5 million ounces, but, we've really just scratched the surface in my mind down in the ranch where, we're at 700,000+ ounces at a couple of grams. But we've got a ton of targets. I mean, we made a new discovery last year. We can follow up on that, but we still have a lot of other targets to test, near surface, high impact drilling. And on top of that, I think this year we'll see us probably drill a couple of deeper holes to test that porphyry potential. In terms of getting our best bang for our buck, drilling wise, I don't think that we're going to be rewarded going from 5 million ounces to 6 million ounces. I mean, I think it's pretty clear that potential exists. For us to spend the drill budget going on and expanding gold zones and really driving that resource to 6-7 million ounces, we're going to be spending $50 and getting $10 in return. It is the way I look at it. I think what we need to do is move the 5 million ounces forward and keep de-risking it, but at the same time, test these new targets, try and make new discoveries. Does that porphyry exist? How close to the surface is it? Can we find one? Can we demonstrate that it's there? And I think that is what's really going to move the needle here. We're obviously conscious of dilution and raising a huge amount of money to go and kind of expand this to 6-7 million ounces. To me, doesn't make a lot of sense. I think we've got a very good production profile already. You've got a 14-year mine life, and we're producing over 215,000 gold equivalent ounces a year. In the first 3 years, we're doing over 275,000 ounces a year. We're ticking all the boxes. This is a big project with significant scale that will get a lot of interest, and it's starting to garner that interest now. So I'm much more focused on the exploration upside. To finish your question, I'm not sure exactly how big that program is going to be at the moment. It'll be pretty significant, but we're obviously still just working through our budget, and I want to give Evan some time to work up targets with the rest of our geological team and kind of try and prioritize how we allocate our drilling budget.
So if I may summarize, and correct me or course correct as required, but it's not, like you say, it's not about necessarily finding new ounces and making it a rigorous enough thing to get it upgraded into a resource ounces. Maybe it's it's testing new targets. If you can turn a light on somewhere over here, somewhere over there in terms of potential, because you came back with a pretty good grade from an assay, that's enough to kind of, like you say, to warrant that proof of concept of further potential. That's kind of where you're at?
Yeah, I think so. I mean, we're going to still continue expanding our known zones of mineralization where they exist. I mean, like Bengal and the Thesis Corridor, and go back to discoveries that we've made in previous years, like Steve. I mean, I think we drilled 10 holes of Steve. It looks really good. We've just, we've not had the drill budget in previous years to go follow up on it again. We discovered the ring zone this year. It'll be a combination.
Oh, good.
But not necessarily directed at growing the resource.
No, fair enough. No, thank you. And so maybe we'll transition then. Let's talk. You mentioned it. You already did a pretty good job introducing the two of them. Yeah, Ewan Orovan, who's coming in as your chief geo, and Kettina Cordero, who I had a good chat with when I was in Vancouver there, was your new VP of IR. Maybe just, you say you kind of introduced, you're bringing things in-house, looking to build the teams. It's not just consultants, but people that are, under the Thesis banner. Maybe could you just, let's just discuss the hiring process, right? I mean, when you sat down with, Dr. Orovan, with Evan and Kettina, maybe individually, can you express, what made it obvious that they were the ones, right? Running through the candidates, what made it clear that these were the people that you wanted to work with?
I mean, for me, it's a lot comes down to reputation, credibility, professionalism, great track record, success, and, experience working for multiple different companies, and, in Evan's case, technical experience as well. He spent a lot of time at Codes, and which is one of the best probably the best economic job skill in the world, and, followed that up with, very strong academic career, and as well as, working for a number of industry companies. So I think the combination of all of those things, and really that can be applied to Kettina as well. can pride myself on, or, hope to try and live up to those kind of qualities as well. And, everybody that I bring into the team, I want them to kind of share that philosophy,
absolutely, the culture. No, I mean,
thanks. That's a better word.
That's the one. Yeah. Maybe this is a little subjective and a little navel gazing, but do their hires maybe reflect a change in company strategy in terms of exploration or marketing? You're bringing them in, obviously, new blood, new ideas. I mean, does this kind of signal that maybe there will be sort of a new tack with either of those things?
Yeah, I mean, I think that will happen for sure. Just with new people, new ideas. But I think part of it is that we just have sufficiently scale now. We've transitioned really from an exploration to a development company. It's time to really start building out our team with professionals and really start, rely on consultants less. I mean, if you look at the webpage or a presentation, I mean, right now you see me and Sean, I think our CFO, there's a lot of people working on this project behind the scenes that are very instrumental to success. But I think, Thesis is, within Thesis, we need to employ more people directly.
When I was in Vancouver, I saw Brian Lenny speak to you guys that's not effectively at that myth there. I mean, he hammers the same drum that I think too is, I mean, it's difficult to find a better, I mean, honestly, in terms of that risk to reward, that asymmetrical relationship, cliched but true, that everyone's always looking for, right? I mean, that he made that point that I mean, Lawyers Ranch, the gold you get, the confidence you get, the jurisdiction you get, the team you get, et cetera, et cetera, et cetera. It's a very good deal. And this is, of course, I mean, you have to be cautious here because this is me talking, and obviously there's risk there in my bias. But I mean, this is my thoughts. Always has been with Thesis, is that what you're getting for the cost or for the price is pretty darn cheap. You can do peer comps all day long, and Thesis comes out looking pretty darn good all the way along. And so it's always been frustrating for me as someone who drinks the Kool-Aid or believes in this story pretty sincerely, that this kind of disconnect remains. And this is my transition. Then you get to this is here, but then you get this crazy new Amarc. Here's your Toodoggone region, right? And just for people that are watching visually, there's Amarc to the south of the Thesis there, and you guys have this very strong, high-quality epithermal system, 4.7 million ounces, 4 million M&I. That's pretty darn good, like you say. That's a project you hang your hat on any day. But of course, there's always this whiff of this sort of porphyry lurking beneath always. And again, you and I have chatted to this, and I mean, look at those holes, right? I mean, hats off to Amarc. That's a hell of a discovery, hole 1, 2, 3, 4 kind of thing, right? That length and that grade of that porphyry discovery, pretty exciting. And so, I mean, this is not a interview with Amarc, as an interview with Thesis. I hope you bear with me, Ewan. But does this change bringing it back to you, does this change? I mean, you mentioned it yourself. I mean, you do have these hopes and plans and dreams of kind of one day getting a chance to get after the porphyry system, what's kind of lurking in the deeps. Does Amarc's, sudden, unexpected, and it's a true discovery, right? It's not some historical thing being rehashed. It's a true new discovery. Does this sort of change that priority list for Thesis about where that kind of porphyry elephant hunting lands, or how does that impact your own strategy or your step?
Firstly, I think this is fantastic for the Toodoggone. I'm not sure if we talked about this before, but in the back of my mind, I've always been a little frustrated that, especially historically, the reputation in Toodoggone was it was small, high-grade gold, silver, epithermal deposits that really didn't have the legs to build out into multi-million ounce systems. And I think, when we picked up this project in 2018, that was still very much the perception of the Toodoggone. And we've demonstrated, that we're just shy of 5 million ounces, and that's not the case. But, to the west of us, there's been, in the Golden Triangle, there's been billions of dollars in exploration spent. And, they've found some phenomenal deposits. But a long time ago, I came up with that golden horseshoe concept. And really, that was just a marketing thing to try and draw people's attention to the Toodoggone, to emphasize that it's the same terrain. So the Stikine terrain is the same age rocks, it's the same ages of mineralization for most part. It's the same styles of mineralization. And there was just as much potential here to make big discoveries but we needed more exploration dollars spent, and that's the only way that's going to change. So, and before I get into Amarc, for the longest time, Centerra's mass copper gold porphyry deposit, phenomenal deposit, very successful project, closed in 2012, I think. But in my mind, there was no way that that's an anomaly, and there was only one porphyry in this belt, especially with it, you can't, at Ranch, we've definitely talked about this, where, we've got a 40 square kilometre high sulfidation epithermal alteration system on surface. You can't create that without an underlying porphyry. And it's really just that, it's upper parts of the system, and, you have something down here feeding it. So, we know there's more porphyries there, but nobody had ever discovered one. And, it's great that Freeport and Amarc have been working on this, and it's taken up some time, like years, but phenomenal discovery now. And I'm really pleased for them. And this is just going to bring a lot of attention to the Toodoggone, which it deserves. And I'm glad it's now starting to get that recognition. So that's fantastic. How that applies to us, I'd say, it definitely gives us more confidence to go and chase that porphyry at depth now. It Ranch is a gold copper system, and all these porphyries like the Mess and the new Joy discovery, gold copper as well. So that gives us some confidence to push some deep holes and chase our target on our project as well. So to me, the way I describe it is, we've got 5 million ounces, phenomenal starting point. We've got the high sulfidation system at Ranch, it's near surface, high grade. We can keep following up on that. And then that's the blue sky. And then the blue sky, if you will, is, there has to be a porphyry there below that. You don't know how deep it is, but there will be one there.
Well, this is the sort of tension I can feel with Thesis is, you have this extremely successful project, like you say, approaching 5 million ounces that you've already mastered and done very well with, and are rapidly advancing and most of the way towards a PFS. And so the risk of getting distracted or like you say, kind of chasing high risk, a lot of dollars for high risk, high reward, but still risky in terms of where you are with what you have, right? So does it? What's the question I can articulate out of this? Is there a moment in time where it becomes more appropriate for Thesis to switch to porphyry as in terms of a very dedicated effort? Or is this maybe similar to kind of a previous comment where if you can just get into it and with a couple of holes proof of concept, that's enough?
It just doesn't make any sense. It is, we poked, I think maybe 3 to 5 holes looking for something deep. That's definitely a possibility for this program. But again, let's wait on Evan to define those targets more. And we've got some good porphyry targets already, but I really want to get his take on it before we commit to anything. But are we going to go drill like 20 different targets, deep holes looking for porphyries? No. That doesn't make any sense. Those are expensive holes. We've got a very high grade gold system at surface where we can drill 150 meter holes. And I'd say we get a lot more bang for a buck than that.
Yeah,
with much higher likelihood of success.
Yeah, right. I think, if you didn't have 5 million ounces to your name, maybe you get distracted. But where you are with what you have, it's a happy distraction. But it's off topic, right? Why don't we? Let me just. I think that let's just take a second here, and we'll come back to this. But there were some questions on the bull boards just around finances, right? And maybe I will come back to this, but. Maybe can we just walk through this questions around this expenditure and what got spent where? There was questions around recent. In June you raised $21 million, and there was questions just around how did it come to pass that. And I'll pause here while I bring this up, and then I'll do that. You can see that, okay? How did it come to pass then that, here we are now with November 30th at $3.3 million in cash? And so, you and I chatted ahead of time and this is one of those things I never, ever will, people that read finances, the investors that read finances, I'm always kind of team investor. And I always understand the suspicion that investors have around company finances. There are bad actors that can go through money, lifestyle company style, very quickly and rapidly. And from my looking at your finances the last couple of years, I've never taken that as that, but I won't carry that water. I'll let you have the conversation, but maybe can you just run through just the expenditures, like what went where to go from this number to that number sort of thing?
Yeah. thanks, Pat, for giving me kind of address this. I mean, and it is, we raised 21 million, as you said, in June. And the budget for the remainder of June through to the end of 2024 was, basically 21 million, not including G&A. And I think, part of it is that we are not an exploration company. I mean, we're a development company at this point. And, I think you were saying to me, Matt, that somebody mentioned, in the August financials, you had, 16 million. And then by the time you got to November, it was 3 million. Where did that money go as well? And part of the problem with reporting financials is that there's a lag, especially when, we're doing most of our work in the summer and the fall. So if we raised 21 million in June, I think we got to the field in mid to late June. Then really July and August are the months where we spent most of our capital in the field, in September as well. But for our August financials, for the money we spent in the field, drilling, doing baseline work, engineering work, it's not on the books in August. I mean, those are accruals that are waiting to hit the books and be paid. So although on paper it looks like we had 16 million at that point, we had a lot of capital ready to go out the door to pay those expenses. And similarly, that is exactly how we ended up at 3 million in November as well. It's the cost of the drilling and the baseline work, etc., catching up to us. Now, the way the budget breaks down in my comment about us not really being an exploration company anymore, even although we have a ton of exploration upside, really comes from the fact that of the 21 million that we had in the remaining for the year, only about 7 or 8 million of that, and I don't know the exact numbers, so bear with me, but it was about 7 or 8 million was actually drilling related, so drilling camp costs. And we did a 10,000 meter program, and 5,000 meters of that was at Lawyers to upgrade some critical inferred ounces that would have a material impact on the PFS. And mostly deep ounces where we're converting, where we're defining the underground to make sure that all makes it in PFS. And then at Ranch, we drilled just shy of 5,000 meters, 3,000 of which was geotech drilling, to make sure that we're ready for these engineering studies, and then a couple of 1,500 meters or so for exploration. Then, so that's the 7 or 8 million that went to drilling. The baseline work alone was about $5 million for the remaining part of 2024. And then, your couple of $1 million in geotech, geochem, site construction work. We've got to pay for the PFS, permitting, engagement, project management. I mean, there's a lot of buckets there that are not drilling focused. And you may question, that makes up another kind of $12 million, let's say. And that seems like a lot of money. But we are in a fantastic position now. I mean, all the capital has been spent. And I think you're flicking to this slide, Matthew. And then, this is a really good slide to kind of demonstrate the point I'm trying to make. I mean, we put this press release out in the fall. And really what I was trying to get across is that although we have a PEA completed in September, that PEA was probably 70% PFS. I mean, there's a lot of confidence in it. And the reason I say that, of the 3 million mineable ounces, 90% of that was measured and indicated, and you can see that there, only 10% inferred. So we had to do last year's program. There's just a very small infill program at Lawyers to upgrade some of those ounces. We now don't have to go back and do a huge, very costly 100,000 meter infill program, for example, to get to PFS. So that timeline is very accelerated as a result of that. We also have completed all the on-site engineering, geotech, geochem, hydrogeology work through the feasibility level on both projects pretty much. So it is, you get seriously intensive, and they're now behind us. And then the other thing is that, and I just mentioned that we spent $5 million in the latter part of 2034 in baseline work. But that work is now complete with wires, and it's 90% complete ranch. You can imagine between the no infiltrate program, all the on-site engineering work, all the baseline work complete, our yearly burn is going to go down significantly. From now on, and this comes back to my two-pronged approach that I was talking about at the very beginning, where, we can move the project forward now and continue to de-risk it with the permit and with the PFS. It become much reduced yearly burn. And then we have the ability to scale up or down the exploration depending on, what the market conditions are like and, how big the program. So there's a lot more flexibility there. But, rest assured, the money was spent at the ground and it went to advancing this project. And I think, we are in a phenomenal position now to keep moving this forward. And even when we get the PFS completed, it's probably going to be about 70% FS. We may move directly from PFS straight through to detailed engineering and kind of cut out the FS. So, again, that's reducing the amount we need to spend on these studies. But they're effectively desktop studies at this point because we've completed most of the work we needed to. So, hopefully that clears up any kind of discrepancies between the quarterly financials.
Well, I think it's a point that's important to clarify that the drilling is a very visible thing, right? It's one of those things that people watch for, wait for, get excited for, and they track the cost per meter, right? Then like you say, you're transitioning more into those invisible costs that, like you say, the market doesn't pay attention. The news releases don't hit the same. People just don't care or whatever, right? And then even though it's just as important, no drill holes make it into a mine without all this other work, right? And I think that you make a good point here as a cogent point, and it's one of these kind of hidden advantages again, is that just circling on my screen here, that you have a lot of this work already done. And so I guess this is maybe a point to clarify. And maybe as a follow-up then is, based here we are, first month of 2025. What is the budget? What are you estimating for costs to get to PFS? What's the dollar value there left? I don't know.
100% sure what it'll cost us to get to PFS. But because it's going to come out sometime Q3, Q4. But because most of our budgets are built on a yearly cycle, so to get to the our hard dollar spend to get to the end of 2025 from, let's say, the end of January is probably about 12 million, including G&A. And then, we're at right now, we're probably on about 10 million hard dollars, but we're also waiting on about $4.8 million back from the government in tax credits. So, we're in a great position. We've got a lot of capital in the bank to certainly cover all of those costs.
Well, this is, again, I mean, I wouldn't be sitting here working with you, talking to you, if I didn't believe the Thesis was a heck of a project and a positive and compelling investment. But I think this is one of those things too, in terms of narratives, right, that you want people to understand, is that you can afford to be patient, right? I mean, that capital destruction and dilution and that is just the name of the game in this industry. Pre-revenue companies, no matter how much value you create to the drill bit, you're still pre-revenue. That ability for people to actually say, all right, you know what, a lot of these costs are baked in, sitting here in January 25. You can actually afford to be patient here and not watch your, and you will not be diluted into oblivion. And I think that's a kind of important point to make here as well, right? So, I guess maybe that's maybe my thoughts on that. Are there any sort of cost saving measures? Your burn rate will go down as you kind of go into not quiet mode, and not less. What's how to say it, right? It's not less active mode. It's not less quiet mode. Lots of work, but just maybe less expensive work is the way to say it, right? But are there cost-cutting measures or anything that you might want to discuss here, or ways that you're looking to bring down that burn rate?
I mean, I think we are very just about our burn and capital expenditure, and obviously very conscious of dilution as well. I mean, we've never issued any warrants on any of the financings that we've ever done. We only raise capital where we need to. And we're very selective about who comes in on our financings as well, and I think that's reflected in our shareholder base. We're 70% of all the institutional funds that have been great shareholders. They go they effectively pro rata on all our financings. So I'd say we're already managing that as best we can, and there's obviously always room for improvement. But we are very conscious of it and optimize as much as we can.
Well, so you know, I think honestly, I think that kind of takes me to the end of my questions I had. I just wanted to discuss the new hires and 2025 plans and then touch on those financial questions as well for people. Is there anything that you wanted to highlight prior to saying goodbye?
I mean, I think my takeaways is to come back to a point you made at the beginning that I thought was very good. When you benchmark our project against others, it represents it well. I mean, it shows very well, and I don't think we're quite getting the respect it deserves or the recognition it deserves. I mean, it is a lot more advanced than people give it credit for, which I think is kind of flying under the radar at the moment, as we've talked about. Right. And the key takeaways for me are, we're basically just shy of 5 million ounces. There's a clear pathway to more. We're in a phenomenal jurisdiction. We're in the Toodoggone. They're starting to get a lot more traction. And the fact that this is a brownfield development site, the infrastructure in this part of BC is excellent. It's effectively turnkey. The topography here is better as well. You can work year round. You can build. You can operate an open pit. There's no logistical challenges there. We've got strong First Nation member support on this project as well. We've been working closely with our member nations from day one. And it's a very good project with a lot of upside that, it's with a fantastic production profile, where we're doing a couple 100,000 ounces a year with a strong mine life. If you count up the other projects in North America that look like that, there's a handful at very best. And it doesn't matter if you talk to single asset producers, mid-tiers, majors, it's the same message that you get over and over again, where, they want to move to safer jurisdictions. They're trying to de-risk their portfolio. And you can manage the permitting and stuff in BC like that. That's perfectly manageable. You can't manage risks in other jurisdictions that are unforeseen. And, I think the M&E space is really going to start heating up. I saw a fantastic presentation, I was by National Bank or somebody the other week there, and it was, saying that basically by 2035, from now to 2035, 70% of producers out there have got, declining ounces on the book. There's no pipeline of projects coming online to backfill that. With very few projects that tick all the boxes, I think you're going to see the gold space really heat up. And it's I think we've turned a bit of a corner now. I mean, the gold price is doing exceptionally well, but it's still pretty tough out there. I mean, you're seeing kind of independent investment brokerages and stuff go under or merge. I think most of the large funds last year had probably 6 or 7% in outflows. So it's pretty tough. Even though gold is doing really well, it's not a great market. But I think we've seemed to have turned a bit of a corner now. I think the equities are starting to get some traction. So, I'm really looking forward to 2025. And we've got a fantastic asset with a ton of upside here. And I think, it's going to be another great year for us.
Well, yeah, I will end this by challenging listeners to 4 to 5 million ounces, half and half M&I. Go find me the peers. Go find your M&A peers. Go find still active peers in terms of their valuations on a per ounce basis, and then add in the fact that this isn't Zimbabwe or Mali or some of the more spicy jurisdictions, right? It's just simple tier 1 BC. And I challenge you, absolutely, go find me a 4 to 5 million ounce M&I project with cheaper dollar per ounce in a tier 1 than Thesis Gold here. So, it is, Ewan. We'll talk again soon, I guess, but I'm sure. But thanks as always, and we'll see you around, I guess, eh?
Yeah, thanks, Max.